Bitcoin is one of these things where the more you understand the technology and the longer your time horizon, the more you can hold of it.
Well, and you're speaking about risk too, and that's something that it's really important. One of the reasons that everybody always emphasizes we are not giving financial advice, even if we are a financial advisor, we're not giving you general financial advice because everybody has different risk tolerance and everybody has different needs. They have different timelines that they're trying to meet. But speaking more generally, then, so with those caveats that risk level is different, how are you able to say how you do advise someone that's asking themselves, should I put a little bit into Bitcoin? What's a good amount? Obviously, not your whole net worth and not next month's rent money, but what do you generally say on that topic to people?
Yeah, I wish there were a good rule of thumb. Like, I feel like in the standard financial world, right, we talk always about you kind of start with the 60-40 portfolio and then you back away from that. The 60-40 portfolio is 60% stocks, 40% bonds, a moderate allocation. Somebody with a moderate risk tolerance with a reasonably long time horizon can do that, right? And then, from there you can be, okay, well, we'll go 70-30 or we'll go the other way, right? And it's like very kind of cut and dry and easy. Bitcoin's not like that. I would say. So, Bitcoin is one of these things where the more you understand the technology and the longer your time horizon, the more you can hold of it. And then it also seems like the more people go down the Bitcoin rabbit hole, the more of it that they want to hold and the less of other assets that they want to hold. And then it's starting to, depending on, what client you're talking to, you're starting to hold people back from having these 100% allocations like you were just mentioning. And that's very different than like the person who's just starting out,
Mm-hmm.
who has just had maybe an hour-long conversation with their advisor, learned about Bitcoin, and is like, okay, well, my advisor normally gives me good advice, so I guess I'll just, do 1%. That sounds fine, right? So there's a very large range there, I would say.
Yeah.
So the thing that I often like to talk about is there's a risk that you need to balance. So there's a risk of not owning any Bitcoin, I think.
Mm-hmm.
There's a risk of potentially owning too much Bitcoin, and Bitcoin takes a lot longer to pan out than people think it will for whatever reason, right?
Yeah.
It's a possibility that not in our lifetimes that Bitcoin is, not a global reserve currency, in which case pretending that the IRS isn't going to exist and that you don't have to worry about all the rules and regulations and other things. You shouldn't own any other standard assets, right? There's a risk that that kind of stuff doesn't happen in your lifetime, in which case, you're holding Bitcoin waiting for this, momentous event that may not happen.
Yes.
So then there's something in the middle, right? Where like, okay, we see what's going on in the banking system. It's not ideal. We see how governments have been very, irresponsible with their use of the money printer. We see inflation. It's a real number that people are just seeing at the grocery store. It's not like this imaginative thing that financial advisors have been talking about for the last 50 years, right?
Yeah.
It's a real thing that people are approaching when they go to the store or when they just are buying things in general right now. And so it's not that Bitcoin's this one-to-one hedge against inflation or anything. It's not that like, as soon as inflation ticks up, that Bitcoin goes up in price, but it does, it is a store of value and it is something that provides long-term protection of that over a long period of time. And so what needs to be balanced is the risk that the fiat system really does go sideways and that inflation gets out of control and that you want to hold some sort of long-term savings that won't be affected by this, versus, the fiat system staying the same and managing to, cobble itself together and get back to some sort of semblance of normal. Given what I see going on right now, for most people, that's going to mean at least a 5 to 10% position. It just is like there's no way around that. And then from there, it's just deciding whether or not you want to take it out of your stock bucket or your bond bucket.
Mm-hmm.
And I think that that's going to be really indicative of your risk tolerance, your time horizon, your understanding of the technology, all the other things that go into like how you design an asset allocation.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.